Welcome to the WebTV Market Review for this edition on Tuesday, August 25th, 2020. To all our viewers in Nigeria and across the world, welcome as we continue our conversations on the financial and capital market as it affects the Nigerian economy. And we'll continue our discourse on impact investing. What's the prospect for it in Nigeria and in Africa? Impact investing has become a very dynamic approach to driving investments and improving it as it has to do with the social good and transformation of activities in economies. With me to continue this conversation is Mr. Andrew Carey. He is the Senior Counsel and Co-Head, Impact, Finance and Investing, Hogan Lovells, based in UK. Nice to have you once again, Mr. Andrew Carey.
Good morning. Good morning, and nice to be back.
Yes, and how's the UK today?
Rainy. Very wet. Yeah, I'm afraid so. Yeah.
All right, so let's begin with the first concept and perspective for today. We know that in Nigeria, according to the Global Impact Investing Network and Dalberg reports in 2015, it showed that about $1.9 billion worth of investments came into Nigeria at that period, targeting about 181 deals, and this had an average of $1 to $5 million in terms of the expectation of a 13 to 17% returns in that regard. That showed that Nigeria was the leading investment destination for impact investments as at that time. Now I want to see that scale, I want to see that increase. And from your perspective, Mr. Andrew Carey, how can our regulators, and in terms of policies and steps, increase that environment for investing, particularly in impact finance in Nigeria?
Well, thank you for that question. I mean, the first thing to note is that this is not a small market we're talking about here. The growth of impact focused funds, impact funds over the last 5 or 6 years has been very nearly exponential. We're talking clear is that the investments are earmarked but are not yet being made. And so your question is about the regulators, and
yes,
the answer is the regulators can do what regulators can always do, which is to try to improve things like transparency. I think transparency is a huge piece of this. If you look at what regulators around the world are doing in this space, be that in the EU or be that in the UK and also in some parts of Asia, is that they're focusing on transparency, disclosure, setting up rules for ensuring that projects, enterprises, companies report in a consistent manner so that there can be proper comparability between one investment and another. That is not easy, to be very clear. That is not easy, but regulators, that's the piece I think that regulators can help with. Regulators and policymakers can also help with the other big issue, which I think is standardization. To try to ensure that, again, it goes alongside disclosure, ensure that when an investor is considering one project or company versus another, it's able to make meaningful
impact
comparisons and draw up documents and close deals in a efficient, transparent way.
Okay.
Regulators have a big part to play in that.
Transparency and standardization.
Transparency and standardization, I would think, are the two areas where the regulators can help. Further down the track, we're starting to see much more interesting things. So regulators are looking around the world at regulatory capital and whether they can improve the risk weighting that is afforded to companies and investments that display genuine and provable impacts on things like the UN SDGs, particularly the environment, but not only. We're not there yet globally. I think that will need a global approach, I think. But yeah, we are seeing regulators push for that. So, you know,
definitely
in our country, we're seeing that.
Transparency and standardization, and then looking at
risk weighting, which is also very important in regulatory capital. Now let's look at the UK government, because you're based in UK, and the UK government has done a lot in terms of looking at how it can improve the environment for impact investing and finance.
Yes.
We even had the last year, looking at the ukgov.uk site, they talked about the Impact Investing Institute, which will look for more effective ways to combine financial returns with a social purpose to help improve people's lives. And that institute was to bring together the UK National Advisory Board on Impact Investing and the Implementation Task Force. You know, UK has even a task force on growing a culture of social impact investing in UK. So when you bring that down to Africa and Nigeria, what are the learning points from steps taken like this from developed markets like the UK? What would you be saying? How can Nigeria learn from this and begin to create that awareness and that need to drive the ecosystem effectively?
Well, actually, you kind of put your finger on it right at the end there. You're talking about raising awareness, because I think a lot of what the Institute has done has been around a communications project that they've been involved in. We've had them come in to speak at our conferences, for example. They are spreading the message and developing the thinking, because just to step back and remember what impact investing is. What impact investing is about ensuring that you look not only at ESG and those usual measures, but you're also looking at financial return. So impact investing is not philanthropy. It's not sort of donor government. It's not development aid. It may work with those things, by the way, and we can talk about that with some of the innovative products around blended finance. But essentially, what an impact investor is an investor. And I would argue an impact investor is simply a smart investor that has regard to the sustainability of the investments that it's making. And that's really the message that the Impact Institute has been purveying. And you may think that's a small thing, but even in the UK, where impact financing is well established, I have been to conferences where you do see the penny drop, where people go, oh, I thought this was about what a high net worth individual might do to salvage his conscience or something. It's not that. It's not. There's that, but and some of the foundations are doing great work. But it's about looking at your portfolio of investments, understanding what the impact they're having on the communities that they operate in, on their people, on the welfare of those they interact with, on their supply chains, and thinking about those things in a holistic, sustainable way. Those that score well on all of those measures are good investments. You know, we talked last week a little bit about COVID, and I'll repeat the point that I made then. That COVID is the big event of the moment, of course, but and lots of things are bad about it. But one thing that is perhaps good about it is that the lesson that it's giving us, that if you're an investor, you have to have regard to the wider world. And I think we'll see that some companies that have proved to be good on all of those things that I mentioned before, that sustainable, that impact investors look for, are going to come out of COVID possibly a little better because they think about the welfare of their people. They think about their travel policies, and they think about the way that they interact with their supply chains, and they care about those things. And that will make them more sustainable.
More sustainable, yes. I mean, that's nice to hear. I mean, it shows that there's bright prospects for the aspect of impact finance and investing. But in Nigeria, again, and African countries, product development is very important, particularly in the markets. We have a huge ecosystem, particularly in Nigeria. Like last week, we discussed what's happening in Nigeria Stock Exchange, where you have the green bonds and space, and even the partnership with the Luxembourg Stock Exchange on sustainable financing. And of course, the FMDQ group, the FMDQ Securities Exchange, has a financial center for sustainability, which I told you we covered, and the governor of Lagos State, where we are, was there to launch that institute. That is creating that awareness and also providing that synergy, policymakers, market players, to improve the atmosphere for impact finance and investing, so sustainable financing. So what would you be saying to collaborations or learning points from developed markets in developing more products that can tie in for impact finance and investing in the Nigerian capital markets?
Yeah. Well, I do think this is a conversation that has to be an international one. It has to be, so for example, what the Nigerian Stock Exchange is doing by talking to the Luxembourg Stock Exchange, and I think it's also the Singapore Stock Exchange that they're involved in, and maybe others as well, is the right approach, because the worst thing I think that could happen with regulators around the world is if there's too much divergence between them on things like what actually is a sustainable product. I think we touched on this last week, but I'll mention it again, and I don't want to plug the EU particularly, but they are doing some phenomenal work around the taxonomy regime that they're setting up. And I suppose the lesson frankly, for the UK as well as for Nigeria, is that this is not easy. Getting this right isn't easy. You need a lot of experts, and you need a lot of work that's done to achieve the standardization that I've talked about. This is a revolution in the way that we think about business. And in order for that to be something that really works, I think that it would be unhelpful if any country tried to do it alone and go it alone. Every country.
There needs to be collaboration then.
It really does.
Okay.
Yeah, it really does. And so rather like we talked about regulatory capital, rather like the way that the Basel project has tended towards a standardization across the globe around regulatory capital, and the way that IFRS has tended towards a standardization around accounting. We need a similar mindset, I think, in the context of impact investing, to ensure that we've got a measure of standardization. The big fear in the market, as you know, is what they call greenwashing, which is simply the idea that you issue a financial product that claims to be, let's say, green, or it could be social, or it could be that it's a gender product, or it could be that it's a product that promotes any of the 17 SDGs, but doesn't, and is essentially, frankly, a bit of a con. And we're going to have scandals of that sort. We've had them already, but we're going to see more. And in order to try to avoid that and retain confidence in the market, then I think you do need this sustainability. So yeah, I would just, and as I say, I'm not saying that just to Nigeria or to African countries. I think that that's true around the world. It's not easy.
Like you said, it's not easy. Particularly also when you look at the fact that the Millennium Development Goals started in 2000, and by 2015 we felt that we'll be able to address those issues: health, poverty eradication,
and sustainable environment, amongst others. But we did not achieve that. And again, we have another chance, this 2030 SDG, Sustainable Development Goals. from your experience and looking at what's happening across the world, we keep hearing the issues of collaboration, very key to achieving it this time. What areas of collaboration would you be advising in Nigeria? We're hearing the aspect of financing, but beyond financing, what other areas must be addressed to ensure that we can really make impact? Because in a continent like Africa, the narrative has always been around poverty, the gaps in education, and even the gaps in governance. Like you said, we need transparency. What other areas do we need to see that this aspect of 2030 SDGs are achieved through vehicles like this?
Yeah, gosh, that's a big question. I do think governance is important. So ESG, as everyone knows, environmental social governance. The governance piece is often, I think, slightly forgotten. What is governance? Governance is about ensuring that you have aligned the interests of those that control the enterprise with the goals of the enterprise. Have you properly aligned those? Of course, you've got to set what the goals of the enterprise are, and that's about having companies that are built with purpose. This idea of businesses that are built with purpose, and then governance structures that sit above that to ensure that purpose is embedded is critically important, I think. If you get the governance right, there's an argument that says everything else flows. You need to align interests. You know, governance is also important when you're for any country that is has a history of governance going wrong, of corruption, or of illicit financial flows and the like. So that's really what people often focus on with governance. But I think it's more than that. It is more about making sure that you have a governance where all the stakeholders in the organization feel and are to some extent empowered. And again, that can even go to empowering your supply chains, empowering your employees, empowering your customers, and ensuring you've got the right governance packages in place to make that happen. And we're starting to see the UK, I think, is starting to think about those things a lot with its Build Back Better program. There's a lot of thought that's going into whether we have the right governance in place. I think that's something that could be a really interesting development over the next few years.
Yeah. And speaking to that, what would you say, just adding this to
small medium enterprises, companies that are willing to play in that space, that are looking at sustainable activities and can become the areas which impact finance investors would like to explore. Like, for example, in Nigeria, we have companies like WeCyclers and the Life Bank. Life Bank provides source blood and medical products to hospitals, while WeCyclers has been doing a lot in terms of helping Lagosians earn money by recycling waste effectively. Okay, so these are examples of companies that key into sustainability, and how can they get that encouragement, or other companies like that, considering the fact that we need to begin to drive this. You said earlier that COVID-19 has its own adverse effects. It could affect some level of investor appetite, but there's still optimism in a way.
Yeah, I think so. Small and medium-sized
enterprises have one thing going for them, which is that it may be much easier for them to collate, collect, and demonstrate impact. And here I'm talking really about data. If it's a lot of it is about data collection and how much. So if you're a small and medium-sized enterprise and you believe that you have a beneficial impact, the trick there is to really ask yourself, okay, how are we going to measure ourselves? What are we going to be able to look back in 5 years and say, yes, we did manage to improve the recycling rate in this area of Lagos, for example, or how did we improve water quality? Can we prove it? And some of that is all about getting right down to the street level, if you will, because nowadays, particularly with mobile technology, it is possible to have vast amounts of data that can be now managed more efficiently. And you probably see where I'm heading with this in terms of sort of blockchain, the leapfrog idea, the way that Africa can actually kind of maybe leapfrog a little bit by using, very robust, credible, non-tamperable with data to be able to demonstrate to an investor, look, we can show you, maybe even almost real time, but certainly with a high measure of certainty that we are improving the, I don't know, the disease rate, or the rate of curing whatever the local health issue is. We can demonstrate that. And if you look back at the history of impact, it used to be that if you mentioned impact bonds to people, they primarily thought about development impact bonds or social impact bonds. These are the products where the return to the investors was directly linked to a outcome. So investors were, the idea was that the market is the best way to find the most effective companies and institutions that can deliver whatever the outcome is that you're after. Now that market has been dogged with problems and has relatively small scale. It tends to be, we've done quite well in the UK in that market, but it is still quite small scale. But it has that idea, that central idea that you look at the outcomes, you measure the outcomes, and then you design financial products that offer returns based on those outcomes, is all about data. And the more that we move into a future where there is the potential for large amounts of well collected, but also well measured data, so that investors can have a high degree of confidence.
Yeah.
And so I don't know, it seems to me that African SMEs
really opportunity. Great.
could be quite an opportunity, because it's sometimes this stuff isn't all that expensive. You don't need necessarily to have the sort of scale of a large multinational. Sometimes actually you could be a pioneer in this and still quite small scale. And there's plenty of some of our clients that offer this kind of data capture. Often it's community based data capture, and so I think that's and there's high degree of confidence in that as well, because it's very hard, or it's harder to manipulate it, and for there to be scandals around manipulation.
Very important.
Yeah.
Now let's look at the outlook
for impact finance and investing in Nigeria and Africa. And while attempting to address that, also I'd like you to speak to the fact that in countries like Nigeria, we have subnational governments. That's not just the federal, but state governments. Do you see state governments beginning to explore how they can key into that by creating products or assessing the markets like green bonds, state green bonds? Because at state levels, you need to have a lot of sustainable impact in terms of development.
So are you talking about local governments that themselves
subnational governments, local, yes, and state.
Yeah. And I don't know enough about
Nigerian law to know whether, or Nigerian finance to know whether local governments are able to raise bonds.
The government is to raise municipal bonds. It's just that
municipal bonds.
The loss needs to be able to re-support that and continue in that space. But yes, the market is receptive to that. That there was a municipal bond in Lagos Island that was used to approach a Surat market, a huge market in Lagos. So those approaches could help.
Yeah,
but let's look at your perspective.
Yeah,
the outlook for impact investing in Nigeria and Africa.
Yeah, no, it's an interesting one. We've seen some green municipal bonds around the world, and there have been some that have not gone as well as others. There's been some areas where the funds were not actually used for what they were supposed to be used. So, but and I don't think there was any kind of fraud or something around that, but it was just that the money wasn't used because political pressures change. And the problem with a local government, once it's raised the money, it's effectively free to do with it what it wants, even if it's promised to do one thing, it might do another. But there's a lot of potential around that, and of course local governments can also support their local companies to try to raise funds in a similar way. But yeah, we have seen around the world these kind of municipal bonds be reasonably successful. They're not a we've also of course seen governments raise green bonds, and indeed things like the World Bank and so on.
Okay, so in terms of the outlook,
what's looking at the outlook for Nigeria and Africa? What are those key things that must be unlocked to deepen impact and finance investments?
I'm an optimist. I think that there is demand in the international investor community for good, investable, demonstrably impactful, sustainable offerings, bonds, shares, equity, investment of one sort or another. The outlook is good. There's a lot of money chasing yield, and the yields in Africa are very attractive. But of course, my own reading tells me that the risk in Africa is overstated, and actually, and that there's a lot of research that suggests that the international investing community emphasizes the risk of investing in well, Nigeria, probably in particular, but other places as well. That is, if you look at historically, the risk assessment hasn't been accurate, and you can sort of see that in some of the ratings analysis and so on. Well, what's the solution to that? Well, arguably, impact finance is the solution to that, because impact finance is all about finding more ways of demonstrating to your investors how you are a sustainable proposition. If you're a company, or indeed a municipal, or indeed a whole country, it's ways of saying, we're not just going to show you our historic financial record and hope that that's our future financial record. We're going to show you how we invest your money in a way which makes us more sustainable, and that's about risk. So I think actually impact financing, and I perhaps would say this as head of impact financing, could be part of the solution. So the outlook, I think, is good for the impact market. It's against a backdrop where we're going to see a reduction in development aid. I think we're going to see a reduction in just the availability of government money to be spent in development. The UK is not alone in that, and I think we're going to see that. So I tend to be optimistic. The UK is it's very interesting at the moment. There's 3 priorities in the UK, which are Brexit, the union, i.e. the union with
Brexit, yes.
Yeah, getting Brexit done. The Scottish situation, referendum is a big one, and the so-called levelling up agenda, which is the north-south thing that we've got here. That Brexit piece is all about being more outward-looking to the world. And at the beginning of this year, there was the Africa conference, the summit. I don't know whether you covered that. I'm sure you did. Yes, it was a phenomenal event, actually. And out of that has come the Africa Investment Group, which a partner of mine, Andrew Skipper, sits on. And we covered it widely in our own Africa Forum a couple of weeks ago. So the UK, I think, is going to be quite focused on Africa, and Africa should exploit that. And I think impact is the kind of way in.
Very cool for improving that.
Yeah.
But thank you very much, Mr. Andrew Carey, for saying that
international assessments have overstated the risk in Africa and Nigeria, that indeed you can come here and explore through impact finance and investing prospects for developing Nigeria and Africa. And also nice to hear that standardization, transparency, and increased awareness is key to improving impact finance and investing in Nigeria. And that, yes, with effective collaborations and international level collaborations, we can improve our agendas, 2030 SDGs, and even products in markets that are ESG compliant. It was really nice having this conversation on prospects for improving impact finance and investing in Nigeria and Africa with you. Mr. Andrew Carey is the Senior Counselor and Co-Head Impact Finance and Investing, Hogan Lovells. Nice to have you, and hope to have you subsequently to explore the improvements and how it has happened, because like you said, you're optimistic about that in Africa and Nigeria.
I would love to come back and talk about it.
All right then, and do stay safe in the UK. I know that it's also been a challenge period managing the COVID pandemic and the impact on the economy. Thank you once again.
Good. Yeah. Thank you.
Thank you.
Bye for now.
Yeah, so that will be all for this edition of the Market Review on our program WebTV. You can join our website www.prochange.com to watch our videos with our news reports and analysis. And this is all to all our investors and the public. Please, this period, avoid schemes and platforms that promises you 100 to 200% returns that are not regulated or registered by the Security and Exchange Commission. They are out to rip you of your hard-earned savings and money, and you don't need to experience that in these challenging times. To come your way again, thank you for watching. Have a nice day and stay safe.